You've probably heard of billionaire investor Ron Barron, whose name is linked to adventurous investments and daring forecasts. His vision is more charged than a ridiculously charged Tesla Model S. Therefore, we're not just leaping into the stock market today, we're also delving deeply into the fascinating world of Tesla, where dreams are fueled with possibility and invention sparkles like lightning. We'll examine the sources of Ron Barron's optimism, analyze the variables that can accelerate Tesla's development, and navigate the stock market's curves where fortunes can flip around quicker than a Tesla Roadster in plaid mode. So fasten your seatbelts, people, because this is one journey you won't want to miss, whether you're an investor looking for knowledge, a Tesla enthusiast gearing up for the future, or just inquisitive about the next big thing. Stay tuned. But first, to receive more updates, don't forget to hit the like button and subscribe to Tesla Stock News. Let's start this video now. Now that we have that settled, let's discuss the bull case for Tesla, focusing on Ron Barron, the chairman and CEO of Barron Capital, and a well-known billionaire investor. Mr. Barron's persistence in believing in Tesla is quite amazing. At present, he has 4.5 million Tesla shares personally, estimated to be worth $1.2 billion. Do you know what keeps him so optimistic? It's the alluring possibility, as he disclosed in a recent CNBC and NBC interview, that Tesla shares could rise 4 or 5 times over the next 7 years. Several convincing factors support Ron Barron's belief in Tesla. He identifies Elon Musk, the enigmatic CEO of Tesla, as the main motivator behind the business's incredible journey. Ron feels that truly amazing undertakings require an unorthodox visionary. Even in spite of Musk's unconventional techniques and occasionally eyebrow-raising statements, Tesla's success has been propelled by Musk's continual dedication to innovation and pushing limits. The company's unrelenting dedication to cutting costs is one of the main factors supporting Ron Barron's unshakable optimism in Tesla's future. This strategic focus is viewed as a key component of Tesla's long-term viability rather than just a temporary gimmick. A major contributing factor to Tesla's success in opening up the electric vehicle market to a wider spectrum of consumers has been its ability to reduce production costs. Tesla is in a strong position to stay ahead of the competition in the electric vehicle market as economies of scale take hold and production methods improve. Ron Barron's bullish outlook is further supported by Tesla's impressive rise in car deliveries. The organization has experienced nothing short of remarkable growth and market penetration. The figures are self-explanatory. Tesla's annual rise in vehicle deliveries has been remarkable, demonstrating the company's capacity to meet the rapidly increasing demand for electric vehicles. This expansion strengthens Tesla's position as a leader in the global auto industry and increases its market share. According to Ron Barron, one of the most intriguing features of Tesla's approach is the company's bold plans to license its cutting-edge software and technology to rival companies. This action shows Tesla's faith in its technological capabilities and its readiness to work with others to further the electrification of the automotive sector. Tesla can further solidify its position as a catalyst for change in the automotive industry by influencing the wider adoption of electric vehicles and potentially generating additional revenue streams through the licensing of its technologies. One more thing that gives Ron Barron hope is the growing battery industry. Tesla's entry into the energy storage and battery industries might completely change how we power our homes and businesses, in addition to the automobile sector. The energy storage business has enormous growth potential, and Tesla is positioned as a leader in this field thanks to its early entry. Ron's prediction that the company's battery division will grow to 30 times its present size highlights the scope of the possibility. Ron Barron's estimate that Tesla's yearly vehicle manufacturing might soar to an astounding 20 million units per year is arguably his most daring one. Compared to the company's current yearly output of fewer than 2 million automobiles, this would be a seismic shift. Such an increase would necessitate persistent, unprecedented demand for electric vehicles in addition to large expenditures. Ron's forecast demonstrates his confidence in Tesla's ability to expand quickly and dominate the industry. Ron Barron is a positive investor in Tesla because of the company's incredible growth trajectory, unwavering focus on cost reduction, openness to cooperation through technology licensing, and diversification into the energy storage market. All of these elements point to a business that is not only influencing the direction of transport, but also establishing itself as a major player in the larger sustainable energy sector. Such optimism highlights the intriguing story of Tesla's ability to keep altering industries and pushing the envelope of what's possible in the energy and electric transportation sectors, even though it should be viewed critically. Let's now turn to the opposite side of the debate and look at the bearish viewpoint about Tesla. Even though Tesla's growth is clearly amazing, some noteworthy issues need to be addressed. One of these concerns is related to Tesla's recent significant price reductions. The sustainability of the market for Tesla automobiles has come under scrutiny in light of these price reductions, especially in the context of rising interest rates. Are electric vehicles becoming less appealing as economic headwinds build? Regarding the bear scenario, Tesla's valuation is another important factor. The company's current price-to-earnings ratio of 79 indicates that the market has already priced in the possibility of continued significant growth in the years to come. It might get harder for Tesla to defend its high stock price if rivals step up their efforts and the company's growth rate slows and margins contract. Having listened to both sides of the Tesla tale, it is critical that we provide a fair and impartial assessment. Investors should consider Ron Barron's constant optimism with caution given his substantial investment in the company. Despite his undeniable optimism, his perspective is inherently skewed by his vested interests, so we must approach his opinion with a fair amount of skepticism. It makes sense to ensure that our investing choices are based on a thorough and objective assessment of all the relevant data. Indeed, investors all throughout the world are drawn to and fascinated by Tesla. When considering Tesla's recent growth trajectory and the enormous size of its addressable market, one could argue that its current valuation is reasonable. Despite the company's charismatic CEO, Elon Musk, and his visionary leadership in spearheading the electric vehicle revolution, Tesla has many real and significant advantages. Its leadership role in the electric vehicle industry is unmatched. The brand's electric vehicles are now closely associated with performance, sustainability, and innovation. Not only has Tesla upended the auto business, but it has completely changed it. With their Model S, Model 3, Model X, and Model Y, the company has redefined the bar for electric automobiles, shattering preconceived notions and elevating them to the status of status symbols. Moreover, Tesla's dedication to software integration and technology has allowed it to create an ecosystem that goes much beyond the car itself. Autonomous driving has been made possible by features like full self-driving and autopilot, which portend a time when Tesla cars can drive themselves around most of the time with little human assistance. The market for electric vehicles has enormous potential for expansion. With the global trend towards greener and more sustainable modes of transportation, Tesla is ideally positioned to benefit from this change. The addressable market for electric vehicles is developing quickly due to government incentives, growing environmental consciousness, and concerns about climate change. Tesla's competitive advantage is demonstrated by its ability to take a sizable portion of this market. Additionally, Tesla's energy section offers additional potential revenue streams in the form of solar panels and energy storage systems. Tesla's involvement in this industry has the potential to be a significant growth driver as society's attention shifts to renewable energy sources. But it's critical to maintain objectivity and caution because of the inherent unpredictability of the stock market. Even businesses with tremendous potential are subject to volatility and setbacks. Market share is being fiercely contested by both new and established automakers in the electric vehicle industry. Tesla's market dominance and growth pace may be impacted by this competition. Finally, a fair assessment of Tesla is necessary for wise investment decisions. Despite the company's many advantages and its leadership position in a revolutionizing sector, investors need to be cautious and realistic while appreciating the dangers and uncertainties that may arise. A comprehensive understanding of Tesla's advantages and disadvantages will enable investors to make well-informed choices that align with their financial objectives and risk tolerance, allowing them to navigate the thrilling yet uncertain realm of electric mobility with discernment and wisdom. Let's now examine a few more elements that investors ought to consider when assessing Tesla's investment potential. The much-anticipated release of Tesla's Cybertruck is almost here, and there is a lot of excitement and anticipation surrounding it. This cutting-edge electric pickup truck is a major divergence from conventional truck designs. The Cybertruck's striking performance metrics and futuristic angular design have not only caught consumers' attention, but also resulted in an incredible number of pre-orders. Pre-orders for the Cybertruck have reached amazing heights before the vehicle even rolls off the assembly line. Thanks to its distinctive look and cutting-edge capabilities, it has sparked an unprecedented amount of interest. These pre-orders are a possible source of income for Tesla, in addition to being evidence of the company's strong brand appeal. The Cybertruck might have a big impact on Tesla's earnings when production picks up and deliveries start, which could improve the company's financial standing. It's also hard to argue against Tesla's supremacy in the electric vehicle market. In addition to being an industry pioneer, Tesla has a powerful and well-known brand that is now closely associated with electric vehicles. Due to its well-known brand and vast network of superchargers, Tesla has a significant competitive edge over its competitors. Tesla's competitive advantage is largely derived from its infrastructure for charging. Tesla customers have access to quick and simple charging alternatives thanks to the vast supercharger network that covers several nations. This infrastructure aims to alleviate one of the main issues with the adoption of electric vehicles, range anxiety. Due to its early use of this network, Tesla has a significant competitive edge over rivals.